the market doesn't always want to listen to me. All right, so I got the recording going now. If you have any questions, Paul, feel free to ask.
Okay.
We're going to go over the trading guidelines. They're not rules of brains, money, guts. They're just basic guidelines. So even if you're not really involved in brains, money, guts, they're just good stuff, notes that you could take that would be good for you personally, because you need to have rules to follow when you play this game, and you need to know the rules of the game, and you need to stick to the rules because it's a financially deadly game. So I'm just going to move to the last slide. So what I'm going to do here is I'm just going to pause there. Okay. So the rules or the outline of the game are that you need to define targets and understand the game itself. Okay.
Mm-hmm.
We must, as traders, know ahead of time the approximate target object or profit object in each trade. So we have to determine if the risk truly warrants the potential reward. So if we see that we have a potential setup, and we need 130 pips stop, and obviously I'm making this up, but the reward is only 35 pips, we're just going to bypass that trade. It's not worth it. If the potential dollar reward is not at least triple the amount of risk, because you're never going to get triple. You may.
Right.
You may get it once in a while, and it's always nice to happen. You may get a parabolic move where you get that type of a move. Then the trade has to be bypassed. Because generally what happens is, say if you have, when like Paul Tudor Jones brought this up, and I mentioned to him before about when having a time limit on a trade where he would exit after a certain amount of time if things weren't working. And I thought that was an excellent idea, because a lot of times too much energy is focused on the marketplace in a market that's not moving and other things are moving, when you could just get your energy off of that and into something else that's more beneficial to make money with. But
Right.
he also said that he always wanted a 5-to-1 reward to risk. So he wanted to take 5 times out of the market for every one that he risked. Because he said, because then at that point, if he was even trading at 20%, where he's having 80% losses, he'd still be making money.
Mm-hmm.
Now, he had said that in a seminar in the early 90s. And I had the privilege of knowing somebody that worked for him. So I asked my friend, I said, listen, I said, he's saying 5-to-1. How can you guarantee you're going to get 5-to-1? I mean, I don't understand what he's talking about. I mean, he could target 5-to-1 and get it. And his answer was, no, our goal is 5-to-1. However, when we're in the money, say by 100 or 150 to 1, we immediately move our stop to that we don't lose any money.
Right.
Then when maybe we're getting 2.5 to 3-to-1, we're watching market price action, then his rules go back to his time. If it's not moving forward by his time limit, he closes. So he doesn't get 5, he gets 3, or he gets 2.5, or he gets 1 3/4. But he's getting something and he's restarting again all over. He wants 5-to-1. Everybody wants 5-to-1. You're not always going to reach 5-to-1.
Right.
So we have to put that in our little idea of our head. We want that, but we're not always going to get it. We always have to ratchet up our stop loss to make sure we don't lose. And that's that's a famous we were discussing Gann before, and Gann also said what many traders said in the 1920s that were fabulous, which were like Dickinson Watts and Sully, who was the Cotton King. I forget his first name. I think his name was Daniel Sully. He was the Cotton King. Cornered the market of cotton in like 1907, made a fortune. All the greats, Wyckoff, they all said the same thing. They all said basically, like, as soon as you're in the money, you have to move your stop to where you don't lose any money.
Right.
The most important thing that we can do as traders is we're not in the make money business. We're in the protect capital business. We're really not. We're not in like that's where the game changer is that we're really not in the make money business. We're in the protect capital business and advance then the second rule is to advance capital. So the
Mm-hmm.
first rule isn't make money. The first rule is to find a low risk idea, a low risk trade, or a low risk edge in the marketplace, and then use that. But realize as soon as it's not working to escape, because we're not in the make money business first. We're in the protect the capital business, because without protecting the capital, you can't make any money.
Right.
Does it make sense?
Absolutely.
I
Yep.
mean, it sucks because the sexy thing to say is, we're masters of the universe and we just make this money out of nowhere. It just rains money. But that's not truly the case. Anybody that comes into the marketplace with that idea usually washes out.
Mm. Yeah. Very true.
No matter how, they could get the worst thing that could happen to anybody. And I used to say this to traders that came on board. The worst thing that can happen to anybody is they make money. Luckily, their first year as a trader, they're just highly successful just because of sheer luck.
Hmm.
Now, how would that happen? Okay, so it's lucky, you're saying. I'm not saying it's lucky. I'm saying that when you catch a trend in a marketplace without really looking for the trend,
Mm-hmm.
but just accidentally catching it, and for some strange reason you're stuck doing the same thing over and over again, which happens to be the right thing. So at the time, the Deutschmark versus the dollar, was going down. The dollar was going down against the mark constantly throughout all my years in the 90s, the 80s, 90s. The dollar really was never rallying. It was always falling. And that was, I'm not a fundamentalist. I'm a technician. So I really don't care about when they're talking about the Federal Reserve policy or the U.S.'s policy of devaluing the dollar to get exports cheaper to sell more around the world. We really weren't producing anything at that time, but we were producing some things, obviously, but not a lot of things. Manufacturing's been gone for a long time. However, a trader would come in and the first year. And he made a phenomenal amount of money, and his whole game plan was what? Sell the dollar. Because that's how he made money. So he was stuck with the sell the dollar attitude, which is, okay, it was working. As soon as the trend, in the beginning, I think it was if I have to say, I think it was 1998, the trend of the dollar changed. It basically went from, going down all the time to rallying, and it only did it for like 8 months. It didn't do it for the whole year, but 8 months. Now, 8 months, that trader was getting destroyed. Every day he would come in and sell the dollar.
Wow.
And it would go up, and they'd take it back, and then, well, tomorrow, I'll do the same thing. Eventually, I'm going to catch the trend is going to turn. But it was not at that time. So the point I'm trying to make is that, you could be, the worst thing that could happen to you is get lucky. Yeah. And then all of a sudden you think that you're some type of genius, and then the market's going to humble you and prove you wrong.
Mm-hmm.
So got to come in. First idea is, that we're not here to make money. We're here to protect capital. Then the second step is to make money. All right, so we got to understand the rules of the game. The main rule of the game is being fully aware that this is a business of risk. This is not that thing that you saw on the internet where the computer, somebody's sitting at a computer screen or a laptop screen, and the hand is coming out of the screen handing somebody money.
Right. Yeah, exactly.
Have you seen those little ads about Forex trading or any type of trading? Like, come here and buy this $75, EA, and guess what? You're going to sit down, and out of nowhere, this magical hand is going to be handing you millions of dollars out of the computer screen.
Right. Yeah.
That is lies, and you'll eventually realize that that's banks use quants. Quants are $1 million like type of programs, but traders have to oversee what a quant does, and they make the final decision about what should the trade be taken or not. A $79 robot could easily replace a $250,000, $300,000 a year trader, and that thing won't come in with an attitude. So immediately you should really dismiss anything that says for $80 it's going to make you millions. That doesn't seem to be quite right.
Yeah.
So this is a business of risk, and it's purely a numbers game based on exploiting all the factors that we mentioned so far.
Yep.
Playing the edge, making sure that the amount of potential reward is good for the risk. Um, all the little ideas that I gave you guys in the previous slides, we have to exploit those. And one of the most important thing is we cannot trade with scared money. If you can't afford the buy-in, stay out of the game until you can. You cannot be trading with the rent money thinking that out of nowhere you're going to make so much money your first week that you're not going to need about paying the rent.
Yep.
If you can't afford to lose this money, you are screwed. You will lose it. And why? Because no matter what system you have, even if the system is 93% correct, when you're playing with scared money, when you're playing with money you can't afford to lose, as soon as the trade goes against you, even for 10 ticks, you're going to self-doubt yourself and you're going to close because you can't afford to lose the money. And then guess what? It's going to go back in the money, and then you're going to get back in again, and it's going to start working, and you'll be like, okay, great. And then all of a sudden, it's going to start to turn and go against you, and you're going to get out again, and you're going to lose.
Hmm.
And you're going to keep doing that until you're going to say the next day, you're going to say, you know what? If I would have stayed with that trade, I would have made double my money that day, and that would have been right. But you didn't. So you're going to say, today is the day that I'm going to take the signal, and I'm going to stay with it. I don't care no matter what. And that's the day that you should have cut it. And that's when it's going to wipe your account out. And that's the way it goes.
Yep.
Because you can't play with scared money. If you can't afford the game, stay out. All right, next. Limit losses and expose advantages. You have to wait for an invite to trade. Using all the market clues and the chart patterns that I'm gonna teach in the trading room. I'm going to show how we can takes advantage of the marketplace to our advantage, right? Limit risks
Mm-hmm.
on every trading opportunity. Okay, there are not trading opportunities every 10 minutes. We do not trade 5, 10, or 15-minute charts. We're not in this game for 10 pips.
Right.
For me, that's mental masturbation. We're in it for a minimum of 60 pips, short term, 400 pips or more, long term. Now, I'm going to talk out of both sides of my mouth. If we get into a trade and we're making 25 pips on it, and for whatever reason, we have that time issue that Paul Tudor Jones talks about, and this market stalling, well, we have one or two things we could do. We can move stop loss to entry, and most likely we'll get hit and get taken out of the trade with no loss or no gain. Just we'll probably move our stop so that we can even absorb any type of brokerage costs. So basically, it's completely flat break even type of trade. So if we got long at 30, we'd say that we got long at 33. So if the market comes down to 33 and we get stopped out, it took care of the brokerage costs, and it's free. But if we run into that scenario where we're only getting 30 pips, 27 pips, and the market doesn't seem like it's going, well, we're going to escape the trade, or we're going to move the trade to break even. So there's the talking out of both sides of the mouth. We're not going to be stupid. We're not going to say it's in the money 30 pips, but we're going to still use our X amount of stop loss on it and have it run to that stop loss. That's stupid.
Right.
There's so many trades to be had, so many opportunities that we're just going to wait. Our trading style is one in which we must be invited to trade. We need the market to offer us a ticket to the dance. Now, it's a blind date, so we don't know if the chick's going to be really ugly. We have no idea.
Right.
We're just going to take the ticket, and we're going to hope for the best. And maybe we get to second base, hopefully. Maybe we get a home run. That would be great. But, we never know. Remove subjectivity. Okay. We're going to try to stay 100% consistent in our trading. We're going to stay 100% consistent in our analysis. That I can assure you. removing all emotions. I've been doing this for 30, I hate to say it, 30 years or so. And I don't believe, when anybody, and they say, you got to remove your emotions from this trading, I don't believe a human being can remove their emotions. I think a human being can be aware of their emotions. And I think a human being can control their emotions. You cannot become an inanimate object and remove emotions. So I like to say you have to learn to control your emotions.
Mm-hmm.
And be aware of them. And believe me, when you're trading, you're intensely aware of what your emotions are, and they're based off of some belief that you have that I don't know what they are. They from years and years of whatever you accumulated. That those beliefs are just showing themselves, and those beliefs are actually instilled in you to do one thing: protect you. They're not bad things. They were there. You put them there to protect you from something. Now, we have to learn to control them. We have to learn to say, yes, I understand that you're there. I know that you're there to protect me. Don't worry. I mean, you basically having this internal conversation with yourself to basically say, the system says buy it, even though it looks like it's raging down. It says buy it. And, my stop is here. It's all within my risk parameters. It's not going to hurt me if we get stopped out. And, we're going to take the trade. What I'm getting at here is that we have to focus on the process, not the outcome of the trade.
Mm-hmm.
You need to focus on the system's process, because you know that if you stick to your system that has an edge, overall, you will make money for the month or throughout the year. Not every month everybody makes money, but you will know overall that if you stick to your trading system, your edge, you will make money. So you got to focus on the process, not the outcome. We don't have any control over the outcome. There's always going to be, market irrationality where things look terrific, and we're going to, like, oh, this is going to be the one, man. I'm going to make 800 pips off this sucker. And you know what? The trade just duds, or it goes the other way. I can remember a time when we were trading, and I was in CRT Bank in New York, and I was trading with my counterpart, CRT Bank in London. We had a guy in Turin, Italy. All three of us were working on this setup, and we had this setup, and everything was coming to like fruition. It was like perfect setup. And we were sitting there, we're giving each other proverbial high fives over the phone, like, this is going to be fucked. We're going to kill it, man. I mean, we were spending our bonus checks, it was just insane. Like, so the market, the price triggered, we jump in big time, and out of nowhere, if we didn't have our stops in, we would have got killed. Thank God. And within a matter of 2 hours, we were thinking we were going to be up like 35%. We were down like 6.5%, and we were out, and we were all on the phone, talking to each other, like, what happened? Like, what happened? So, you have no control over the outcome. You just have the control over the process. So the question you need to ask yourself is, do you want your emotional theory, your gut instinct, to be right? Or do you want to be rich? So with that, we say, welcome to Brains, Money, Guts. I think that I don't think I covered anything that was too abstract there, right? Do you have any questions, Paul, before I end this and put it up on YouTube?
No, not at all. Not at this point.
All right, man. Well, again, welcome to Brains, Money, Guts. And I look forward to you guys jumping in and checking out our service. And remember, enjoy the party. Dance near the door.